Welcome everybody to the 41st episode of Business Insights on the 29th of March 2021. Business Insight is a very exciting webinar series hosted weekly on Mondays with a panel of industry thought leaders for business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscape that impact how they do business. Our panel of advisors aim to inform, educate, and provide strategic insights to the changes in the economic and legislative and financial landscape that affects small business. We aim to guide our viewers to navigate business challenges through COVID-19 and beyond. Let's now meet our panel of industry thought leaders. First up, Mr. Adam Lyle from Biz Doctor.
Hi Sam, happy end of month.
Happy to have you on board, Adam. Thank you. Next, Ian McLaughlin from Imperium Accounting and Tax.
Thanks, Sam. Welcome, viewers. End of quarter as well. So it's a big day, almost.
Indeed.
2 days away.
Indeed. And welcome, Lisa Garrido from Enigma HR.
Hello, everybody. I can't believe it is that time of the quarter. Time's going too fast, guys.
My name is Sam Gracie from Monica Private Wealth, and enjoy this webinar with us. I should also provide the following general warning. The views and opinions shared on this particular webinar are designed to be general information only. They're not designed to be taken as specific advice for your personal or specific circumstances. Please feel free to reach out to any of the panel members for specific advice to meet your requirements. And now let's get started. First up, I'm going to go to you, Ian. Tell us a bit about the end of the quarter and what's happening, everything to do with accounting, tax, and JobKeeper.
Thanks very much, Sam. So yeah, it is the 29th of March, which means that JobKeeper officially ended yesterday. So now businesses from the 1st of April till the 14th of April will be able to go online and make their declarations for the month of March, to submit their turnover for March, and then order and also update their employment details for their employees so that they can be paid their JobKeeper reimbursement for the month of March for the month of April. So that is going to be the last one. So I know that I've been harping on about this a lot, but I'm going to really try and press this point today just one last time. So it is really, really important now that JobKeeper has come to an end, that within your business, you have at least a 12-month cash flow plan. And ideally, I'd like to see these go out at this point in time to the 15th of May, 2022. And the reason why that is because when most company and trust tax returns are going to be due, and individuals are going to be due for lodgement for the 2021 financial year. So tax planning is a really important piece. So that should be done in the months of May and June, but you should start to be getting ready for that now with your accountant and be going through those numbers. There's no point in getting to after 30 June being 1 July, and then in August, September, October, November, preparing your tax return and realizing that there is actually a tax liability. Now is the time to plan for that, and we need to put it in the cash flow. So if we do tax planning in May of 2021, we then have 12 months to provision for any sort of payment. So with the lack of JobKeeper not coming through, then it is super important that the cash flow is in place and you know what your expected bank balance is going to be within 12 months' time. So when the pandemic hit, the ATO deployed a lot of their existing resources into other areas to help with the cash flow boost and JobKeeper. Now that they are coming to an end, once the April lodgements have been done, or March lodgements, I should say, a lot of those staff are going to go back to their areas that they were previously involved in, which would be compliance, lodgement, and debt as well. So when the pandemic hit, the ATO did put a bit of a blanket hold on calling up people that had outstanding debts, but that's all going to stop now. And tax agents have also seen that the ATO is going to get a lot harder in making sure that lodgement deadlines are met. And as I've talked about before, it's really important that BASs are lodged on time. Don't go 2, 3 quarters, 4 quarters without them being lodged. Get the amount sorted that you owe, and then put that into your payment plan if you need to, if you can't afford it. And then that payment plan amount needs to go into your cash flow. So now is a more important time than ever that businesses really need to look at that cash flow. We can't just fly blind anymore. And I'm sure that Adam will probably talk a little bit more about this. So there is a couple of accounting bodies that are calling for the ATO to extend the lodgement deadlines this year and next year from the 15th of May to around about the 30th of June. Whether or not that happens, I'm not sure. I don't personally think so, but I will obviously keep people up to date. But we need to bear in mind a couple of key dates. So we've got 31st of March, so that's going to be end of the third quarter. BASs are then going to be due and payable at the end of May. And then we're going to have, once 30 June hits, then our 2021 tax returns are going to be due for lodgement, and they're going to be due for most companies and trusts and individuals on the 15th of May. So I'm just going to keep reiterating this point. It is super important that we do have a cash flow in place to make sure that the business is going to survive. Thanks very much, Sam.
Thank you, Ian. A great set of advice for everyone in business, and of course, being on time with all your paperwork and compliance is very important. Now let's go to Adam. Adam, can you tell us a bit about well, business advisory, everything to do with insolvencies and so on?
So I'm in two minds. I don't know whether I should be doing the Cliffy Young shuffle down the Hume Highway and just, plodding along and making sure that everything's okay, or whether I should be, running like a very famous financial advisor did, running towards the gap and then jumping off the cliff. But I can tell you now, if I was in the hospitality and leisure industry, I would be opening up the bottom drawer, having a squiz in it, and seeing how many coins I've got, because I'm going to need them. I'm going to put up on the screen, if Ian can let me share screen in a moment, about some expectations that the hospitality and leisure industry are already anticipating. Now, I mentioned a couple of weeks ago that the government have they've actually, looked in their crystal ball and they've gone, oh, hang on for a minute. The leisure industry are going to need some help. So let's get some targeted relief packages going to encourage people to fly. Now, when you do have that situation, you've got an expectation that people are going to be okay to get through. Now, 2020 was an unprecedented loss for the industry, particularly in the airlines. And on the screen, I'm hoping it can work. If someone can give me a thumbs up, it would be great. There's a graph that actually indicates the loss for 2020 in the airline industry of something in the order of $84 billion. Now, the industry this year is going to have still an anticipated loss of $15 billion. Now, yes, it's fair to say that there's a lot of above the line red in the years prior. But who in their right mind can predict in 2015 when it was at its peak, or actually 2017, who could have predicted that in 2019/2020, when it became fully effective, that we were going to have such a massive loss? And if you look at the aggregate of all of that, it's pretty indicative that the airline industry are not expecting to come to the right side of the ledger, certainly in 2021 or even arguably beyond. How does this affect our viewers? How does this affect our SME players that are in the hospitality and leisure industry? Well, even the Reserve Bank this week has said that they do not anticipate that the hospitality and leisure industry will return to pre-COVID levels. In fact, they've said it's going to be expected that they are going to have a 20% decline in their overall turnover. So if you are watching us today and you have an interest in a restaurant, you have an interest in a cafe, you have an interest in a takeaway store, or some kind of leisure or food industry operator that relies on the discretionary spending dollar, and you're expecting anything more, and I would, to be frank, double that rate of 20%, and you're expecting anything more than 60% of your pre-COVID turnover, I think, quite frankly, you probably need some help. Because as Ian rightly just said, you need to be very careful with your cash expectations moving forward, firstly. Secondly, you need to be making sure you're getting very good advice about what commitments you are making and how are you going to re-engage with those various stakeholders that have the most impact on a business that is hospitality and leisure. Now, the reality is that landlords, banks, the ATO and creditors, all bets are off now. You don't have anyone to call on. You can't ring up and say, oh, woe is me to the ATO anymore. They'll say, sorry, buddy, we gave you a year's support. So you're going to be expected to stand on your own. And that includes landlords. Now, landlords of restaurants and hospitality venues are going to want to see some return on their investment. They've had the year where they've had to stand back and not do anything, but it's going to get really tough really quickly. Now, those who are going to airports and are flying, you're probably seeing some elevated activity levels, but nothing like pre-COVID. No way in the world. I mean, I know Lisa, for example, goes to Adelaide regularly. God knows why. I mean, Adelaide's, Adelaide. But the reality is, even Lisa would acknowledge that the level of volume of traffic going through the airport on either of those links to that connection is nowhere near what it was pre-COVID. And I certainly know I'm going to Queensland this weekend, and Ian's been up there recently. It just the volume of traffic through the airport and other associated areas for hospitality and leisure are nowhere near those previous levels. So don't panic, communicate with all your relevant stakeholders and make sure you're talking to Ian or getting your accountant to give you some really good advice. And you know what? Check in with your lawyer as well, because those exposures for landlords, particularly in hospitality venues in the CBD areas, they are ruthless and they will make sure that they sting you. So I hope that's been helpful. I really do feel for the hospitality and leisure guys. I do feel that, particularly given that there's no international travel and there's still interrupted state travel as well, and not all the routes are actually operating because the airlines just simply can't afford to do it. So I hope everyone is going okay and get some good advice.
Thank you, Adam. Great advice there once again. And yes, I agree with you. There's a great need for great advice in this particular area, especially from your accountants and business advisors to help you basically navigate through this particular period of time, especially as you're coming off JobKeeper and so on as you move forward. Now, on to everything to do with people's strategy. Let's go to Lisa and get an update from Lisa.
Thanks, Sam. And guys, speaking of good advice, if our viewers can recall, last week I talked about the cost of bad hiring actually rising, specifically from a study done by Robert Half, where 76%, so that's about 3 in 4 senior managers, made a recruiting blunder or a bad hiring decision, which resulted in wasting time, energy, and money in the process. And last week I said that the magic number is 16 weeks. So that's the impact of a bad hire, is 16 weeks of resources, productivity, morale, and wages, basically. So, and that was a research that I actually quoted last week. And I did say last week that I'd like to highlight a particular organization that actually just innovated fairly quickly as a response to making good hiring decisions. So Seek recently did a research of 4,800 employees or employers, and They stated in the research that all employees have started already to pre-COVID, obviously valued work-life balance and flexibility, and of course, workplace relationships. And that's one of the key factors in retaining employees. But the pandemic has definitely brought those requirements to the fore, which actually impacts the way that we recruit these days. So with salary and financial security, of course, still a factor in searching for work and in employment, one of the most crucial key factors, obviously, or emphasis that candidates look for is lifestyle fulfillment and personal fulfillment. So as I mentioned last week, when you're hiring employees, you have to have a very specific commitment to well-being and work-life balance. And it's not just the commitment that you state at the interview, you actually need to be able to spell it out. So an example of spelling it out, if you like, that I'd like to highlight this week is Spotify. You know, this Spotify organization, global organization headquartered in Stockholm, but also have got regional headquarters in the US and here in Sydney CBD. The policy of Spotify now, which has obviously been accelerated by the pandemic, but more so by digitalization and globalization, their policy is to allow employees to first choose whether they work from the office, from home, or a hybrid blend of both. So for staff who aren't near the office, Spotify will support them with co-working space in a membership of a co-working space or serviced office if they still want to experience a physical office. Isn't that remarkable? Now, obviously, we're talking about a global organization here that has resources to do that, but it's about opening your mindset as to the possibilities of retaining and recruiting good talent. So for Spotify, the policy doesn't stop there though. Employees will also have the flexibility to choose which country and region they want to work from. Amazing, huh? Some limitations obviously will apply around time zones and regional entity laws, but my main point here is with a global workforce, the company now has a global flexibility in retaining and attracting talent. So they've identified 3 factors behind their flexibility policy, something that we can all learn from. Firstly, retaining the talented staff members who wanted to relocate away from existing offices. That's one. Secondly, to widen the talent pool available to Spotify. We here in Australia have already been subject to very tight candidate markets, regardless of what state or region you belong to. So especially now with access to global talent, why are we not nudging better ways of working and better opportunities for staff? So moving towards this kind of mindset rather than a traditional way of thinking is what's helping Spotify innovate and develop better remote working strategies. For instance, conferences might obviously still be in person when the travel bubble starts to burst, but meetings can be a combination of in-person and remote. So that hybrid type of meeting, which some organizations are already developing. Induction and onboarding programs, again, ideally that would be good to have in person for those that can make it, but again, making sure that online platforms are available. So there are so many opportunities if you have the right mindset as an employer, particularly here in the Australian workforce, when you're asked about the flexibility of employment in your organization. So just have a think about that and let's see what we can do. That's it for me, Sam.
Great, thank you, Lisa. Great advice once more. And now on to interest rates and property and the stock market. So firstly, rates remain steady over the last week. Many of the fixed rates and variable rates on occupier still sitting at high 1s to mid 2s. Fixed rates remain very competitive still. But I wanted to just touch on the fixed rates because some fixed rates have moved. And if you're thinking of fixing, you may want to discuss an option called rate lock with your credit advisor. since this will lock in the fixed rate for up to 90 days, subject to the bank's policy, in case they do go up against you. So definitely make sure you touch base with your credit advisor on that. Now, if last week's auction results wasn't strong enough, well, this week is even stronger with very high clearance rates in almost every state and far more properties transacting in Victoria and New South Wales. I can say that there are definitely two people who are very happy about this, and that is the Treasurer for Victoria and Treasurer for New South Wales, who are collecting record stamp duty. Of course, next week is Easter Saturday, so it'll be a bit more subdued. I will say that also when I know everything is pointing up and it is not very property boom related, it will continue, but no property booms have continued indefinitely, and there will be an end to this at some point. We may not have actually reached that tipping point as yet, but there will be a time where we will see some price stabilization and even some decline back down. Who would have ever thought that that may ever happen? Often when this happens is because of a catalyst, and those catalysts are needed to make a change in the way that the market goes up or down. And I feel that this may come by the way of the regulator in time to ensure that the market doesn't hot up too much. It's a wait and see game at the moment. Right now, APRA, who recently reported back to the Senate, said that obviously they're not responsible for the house prices going up. They're more responsible for the financial services. And so I guess at this point in time, they still have comfort about how things are going right now. Now, onto the markets. Australian stock market had one of the best runs last week since February, increasing by 1.7%. And it started a bit flat today. Healthcare did really well, up 5%, and IT not so great, going the other way. Now, there's more to the Crown takeover I mentioned last week from the regulator's perspective, so it'll be interesting to see how that goes. But the big news is that the ASX-listed mortgage world is changing a bit. REA, realestate.com.au, has just made a takeover bid for Mortgage Choice, one of the biggest mortgage broking houses in Australia. Now, having taken full ownership of another great and a large broking house, Smartline, which yours truly has an association with, it certainly makes for a very stronger broker channel with cloud going forward. And of course, we'll follow the progress of that with great interest. And with that, I'll bring my section to an end. Is there any questions or comments from the panel?
I only have one. Is as we were going to air, Brisbane's now been entered into a lockdown as at 5 p.m. tonight. So I really feel for the businesses up there. This is now the third or fourth lockdown they've had. You know, to take care of everyone up there, and of course, this is going to have a huge emotional drain on them and their employees. And of course, they are now expected to survive with no JobKeeper, full stop. So, you know, these things are going to happen in Australia. We are going to have spikes. And there is obviously overwhelming health advice about why the lockdown needed to happen. But when you have arbitrary decisions to shut businesses down with little or no support, it's going to be a tough going for all those people up there. So our thoughts are with them.
Indeed, indeed. Okay. Well, so don't forget to check out us on Facebook, YouTube, and LinkedIn at Business Insight. You will see this recording on YouTube channel shortly. We will happily answer any questions you have about what we cover off in the chat area down below those as we go. So we do encourage you to engage with us over time. We also want to remind you, our viewers, that the panel is taking a break next week, being Easter Monday, and we'll be back in 2 weeks' time. So in line with the end of JobKeeper, encouraging all those who have been hanging on to continue to hang on, it's no other than Theodore Roosevelt, who had a very famous speech called Staying in the Arena. Just going to quote a couple of lines from that. So he talks about the fact that the credit belongs to the person who is actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, and who at worst, if he fails, at least he fails while daring greatly. We encourage you to hang on and keep going in the arena so that you are past the worst of the pandemic and even deal with the lockdowns that happens in Brisbane or any other state coming forward. Till next time, have a wonderful week and a great Easter break.
Have a great Easter, everybody.